If you have any questions, you may comment the same. If you are interested in the class, please click the like, and if you haven't subscribed the channel yet, please do it now. Luca Pacioli, an Italian, is regarded as the father of accounting. It was he who published the first book on accounting titled Double Entry System of Accounting in 1494. Accounting may be defined as the process of recording, classifying, summarizing, analyzing and interpreting the business transactions and communicating the result thereof to the persons interested in such information. ഒരു ബിസിനസ് സ്ഥാപനത്തിൽ നടക്കുന്ന ഇടപാടുകൾ രേഖപ്പെടുത്തുകയും തരംതിരിക്കുകയും ചുരുക്കി എഴുതുകയും വിശകലനം ചെയ്യുകയും നിഗമനങ്ങളിൽ എത്തിച്ചേരുകയും ചെയ്യുകയും ആ എത്തിച്ചേർന്ന നിഗമനങ്ങൾ അല്ലെങ്കിൽ വിവരം അതിൻ്റെ ഉപയോഗമുള്ളവരെ അതറിയുന്നതിൽ താല്പര്യമുള്ളവരെ അറിയിക്കുകയും ചെയ്യുന്ന പ്രക്രിയയ്ക്കാണ് അക്കൗണ്ടിംഗ് എന്ന് പറയുന്നത്. Now next it is objectives or functions of accounting. The primary objectives or functions of accounting are the following. Number 1, recording. Recording of business transactions in the appropriate books of accounts is the principal purpose of accounting. Transactions are firstly recorded in the book of original entry called journal. Number 2, classifying. Classifying is concerned with bringing together transactions of similar nature to one place. Classification is done in the book known as ledger. 3, summarizing. It is the briefing of the classified transactions in a manner understandable and useful. Transactions are summarized into two statements: A, income statement or profitless account showing the income or profit or loss of the business. B, position statement or balance sheet showing the financial position or position of assets and liabilities of the business. The next point of objective or function of accounting, point number 4, analyzing and interpreting. The business transactions recorded, classified and summarized is analyzed at the end so that to arrive at interpretations or conclusions about the financial condition of the business. The last point, point number 5, communicating. The result or information obtained from the accounting process may be communicated to the users or interested parties such as owners, management, employees, investors, creditors, bankers, government, etc. Now basic terms in accounting. The first, it is entity. Entity means something having a definite individual existence. Business entity is a business enterprise having a specific identifiable existence. Next it is business transactions. A business transaction is a dealing or an event which involves some value between two or more entities. Transactions may be cash transactions or credit transactions. Assets. Assets are economic resources of an enterprise that can be expressed or shown in terms of money. Assets are items having value used by the business in its operations. Examples are land, building, machinery, furniture, stock of goods, cash in hand, cash at bank, etc. Assets can be classified into two categories. They are A, non-current assets or fixed assets. B, current assets. A, fixed assets. Fixed assets are assets which are acquired or purchased for employing or using in the business for a longer period of time. B, current assets. Current assets are assets which are held for a short period of time. Liabilities. Liabilities are the obligations or debts payable by the enterprise in future. Liabilities may be categorized into two. They are A, short-term liabilities, B, long-term liabilities. A, short-term liabilities. Short-term liabilities are liabilities which are payable within a short period, that is within 1 year. B, long-term liabilities. Long-term liabilities are liabilities payable after a period of 1 year. Capital. Capital is the amount invested by the owner in the business. It may be in the form of cash or other assets. Next it is sales. Sales is the revenue or income earned from the sale of goods or services rendered to the customers. Sales may be cash sales or credit sales. Next it is revenues. Revenues are the amounts earned by a business concern. The common items of revenues are revenue from sales, commission received, rent and interest received, etc. Next it is expenses. Expenses are the cost or amount spent in the process of earning revenue. Examples are wages, salaries, rent, interest, electricity charges, etc. Next term it is profit. Profit is the excess of revenue over expenses during an accounting year. Next, loss. Loss is the excess of expenses over revenue during an accounting period. Now drawings. Withdrawal of cash or goods from the business by the owner for his personal use is called drawings. Now purchases. The total amount of goods procured by a business concern for the purpose of sale or for converting into finished goods for sale is known as purchases. Purchases may be cash purchases or credit purchases. Now stock. The goods available with the business for sale is termed as stock. The value of goods remaining unsold at the end of an accounting year is termed as closing stock. Now debtors. Debtors are persons and other entities who owe money to the business for the goods and services purchased on credit. In other words, it is the total amount receivable by the business for the goods and services sold on credit. Next, creditors. Creditors are persons or other entities to whom the business is owed or business owes money for the goods and services purchased on credit. In other words, it is the total amount payable by the business concern for the goods and services purchased on credit. Now bookkeeping and accounting. The terms bookkeeping and accounting are often used synonymously or in the same meaning, but basically these two terms are different. Bookkeeping is concerned with the recording of business transactions. Accounting, on the other hand, is a wider term and consists recording, classifying, summarizing, analyzing and interpreting the transactions and communicating the result thereof to the interested parties. Now branches of accounting. Accounting has three branches. They are number 1 financial accounting, number 2 cost accounting, number 3 management accounting. Number 1 it is financial accounting, and the meaning of financial accounting we have already seen. Number 2 cost accounting. Cost accounting is that branch of accounting which is concerned with the ascertainment of cost. Cost is the total expenses incurred for the manufacturing of a product or rendering a service. Third, management accounting. Management accounting is that branch of accounting which is concerned with providing accounting information in a way useful to the management. It provides not a mere accounting information but an analyzed and interpreted accounting information useful to the management for exercising its different managerial functions such as planning, organizing, directing and controlling. For the easy access of the classes, please subscribe the channel. It is free by clicking the subscribe option, and for getting notifications, click the bell icon below.